Hey, my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about how much are interest rates likely to drop in 2024. Now, interest rates have been gone crazy in the last year. Interest rates started at 0.1%, the Bank of England base rate, and have risen all the way up to 5.25% as a base rate. Now, that took 14 consecutive Bank of England meetings for that to happen. And now we've had 2 or 3 meetings where they paused those interest rate increases. Now, does that mean that that's the end of it? Well, a lot of this is dependent on inflation, and that's really what we've got to look at. Is the inflation going in the right direction? Are they comfortable? What other factors impact interest rates? And we're going to talk about all of that and more in this video, so make sure you stick around. Plus, I'll share with you where I feel interest rates will end up at the end of 2024. Now, before we jump into this, as always, if you haven't subscribed to the channel, do subscribe and hit the bell notification. We've got new content every single day. We're taking a day off over Christmas, but we've got content every single day on how to grow a property portfolio and what you need to do to get the right rates and deals for your house. So make sure you do subscribe. And while you're here, smash the like button or tickle the like button. Do something to the like button, guys. That really helps me with the YouTube algorithm. We had 2 million views in 2024 on the channel, and every one of you that smashed that like button really helped that happen. So, the interest rates, they went from 0.1 to 5.25. Now, that was all off the back of inflation. We were at 11.1% inflation at one stage in 2024, which was crazy high. That really hits people on lower incomes because a larger percentage of their money goes towards gas and electric and food and rent or mortgages. And that needed to be brought down. Now, how you bring inflation down, the only tool the bank has is to raise interest rates to stop people spending, and then companies need to reduce their prices to get you to buy more products and services. So they did that, and it didn't go as quickly as we hoped. A lot of European countries and America brought their inflation down faster than us. Now, our inflation currently sits at 3.9%. This is the November data that we got in December this year. And so that's really high still. The target is 2%. Now, what's interesting is if you listen to the Bank of England, they are saying rates will stay higher for longer. That's what their language is. If you listen to the American side, the Federal Reserve, they're saying we are likely to drop interest rates 3 times this year, which is very different language. Now, the Bank of England stance is that they've been attacked a lot by the media because a lot of people said you didn't act quick enough to bring this inflation down. And so that was an attack on them. And so they don't want to get that attack from the media again. They're not going to tell you when the rates are going to come down, the Bank of England, because if they told you rates are going to drop in April, if you had a transaction going through today, you would stop doing that transaction because you'd wait for the rate to come down so you can borrow at a cheaper cost. Let me know if that makes sense in the comments. So what we've got to look at is the Federal Reserve are giving us data already to say they're going to drop interest rates. They're not saying exactly when, similar to Bank of England, but they are saying it is going to happen in 2024. Now, dropping interest rates is not necessarily going to pass mortgage rate reductions on to you. However, the lenders that you borrow from, the banks that we go to, they don't borrow from the Bank of England necessarily. They borrow on something called a swap rate from the market. Those are going down based off the fact that interest rates are likely to drop at the Bank of England in 2024. And so what we're seeing is, and what we've seen, we saw a rate this week, so that's inflation, we saw a mortgage rate this week that was at 3.94%, which is crazy considering we were at nearly 7% this time last year. Now, what will happen is as the Bank of England drops, That will reinvigorate the market. People that are sitting on the sideline will start to come back in. The reason the banks are dropping rates right now is because there's not a lot of transactions. They're fighting for our business, which is good for us. Now, as more buyers come back into the market, they're not going to need to do that so much. And so I feel if the Bank of England drop the base rate to 4.5%, I don't think you're suddenly going to see lending rates at 3.5%. I don't think they're going to need to keep dropping. They're dropping today because there are not enough transactions. So really, we do care about what the Bank of England rate is, but we really actually care what is the rate that we can borrow money from. And so I think that by the middle of next year, 2024, let's just say by June, I think that you will see rates around 3.75%. I don't think they're going to go down as much as people might think, because even if these are dropping fast, they just won't need to do that. People are going to come in, the market's going to get busier, but they will drop a little bit. I don't think it's going to be quite as big as you might think. And I think that by December of next year, I don't think it's going to drop much at all. I think that you'll see a 3.6% lending rate that you can get. But the rate from the Bank of England could be down to around 4% by then. So it is going to get better, but it isn't worth necessarily holding out for. So if you're an investor right now and you see a good deal, would I be waiting for rates to drop in order to get a lower interest and lower monthly payments? No, I'd be trying to negotiate a cheaper deal off of that property right now. I'd do the deal, I'd carry on as normal. What about if I was a residential property owner and I was just about to come off my deal and I think maybe I'll stick it on the variable rate for a number of months and just wait for rates to come down? I probably wouldn't do that either, because the variable rates are really, really high at the moment, and that's going to cost you extra money each and every month. I just don't think it's worth it. I would probably look to fix for a 2-year period, but you need to speak to a broker. You need to make sure that works for your circumstances. But I think if you look for a 2-year deal, then at the end of that 2 years, I think rates probably will have come down again. We won't be talking about inflation for sure in 2 years. We'll have moved on to something else and it will be a lot better situation than it is right now. So I don't think the rates are going to drop, in summary, as much as you might expect. Even if the Bank of England goes down 1 or 2%, don't think that that's going to go into the lending. The lenders are discounting right now, as I said, because there is not enough business. They're fighting over that. But as the buyers come back in, they don't have that incentive to deal with that kind of stuff. And so they're going to get transactions regardless in that situation. Let me know your thoughts. Where do you feel, 2 questions, where do you feel the Bank of England base rate will be by the December period in 2024? And where do you think lenders, what do you think the cheapest lending rate you'll be able to get? So I've said that I feel that the cheapest lending rate by the end of 2024 is going to be around a 3.6, a little bit down from what we are today. Do comment on the video, do subscribe, make sure you hit the like button. Go and check out some more content on my channel. Why don't you go and watch this video right here?